and welcome. You're watching The Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thaplayal, and today we are going to be talking about SEBI's regulatory change for AMCs in order to cut down mis-selling. So, what all SEBI has come up with, with regards to NFOs and also, ensuring the distributors' commission in order to protect investors. We'll be discussing all of this in the show and answering your portfolio queries up ahead. Just in case you want to send across your mutual fund portfolio queries, you can do that on our WhatsApp number, which is 865-797-4571. You can also send us your queries via email, which is themoneyShow@etnow.tv. So let's begin the show. And SEBI has introduced a significant regulatory change for AMCs, mandating the deployment of funds raised through NFOs within 30 days of unit allotment. This new rule, effective from 1st April 2025, aims to ensure that AMCs only raise funds that can be reasonably deployed within a short time frame, thereby curbing the potential of mis-selling of mutual funds. Until now, there was no specified period for fund deployment, which often led to delays. To further prevent the mis-selling of mutual funds, SEBI has directed AMCs to ensure that distributor commissions for NFOs are lower than those for existing schemes during switch transactions. Now, AMFI is expected to develop a detailed guidelines regarding distribution commissions in consultation with SEBI. Now, these measures aim to safeguard investors by promoting transparency and fair practices in the mutual fund sector. But let's understand all of this in a very layman language for investors like you and me. And let's get our guest on board today. I have Piyush Chandra, Vice President Product, IIFL Capital. Piyush, hi, good evening and welcome to the show. All right, so a lot of steps taken by SEBI in order to curb mis-selling. I really want to understand what's the background, what was actually happening so that, SEBI actually came forward, like always, protecting the interest of investors. So if you can just start with the background.
Thanks, Kavita. Let's understand what has led to these changes that SEBI has taken. Before we get into that, let's understand what mis-selling is and how it has been happening in mutual funds and other sectors. So mis-selling is a sale done directly or indirectly by someone making false or misleading statements or claim which could be like omitting or hiding material facts or suppressing crucial information involved in the investment of product. And obviously, there are sectors and every industry has some false apples, and there have been incidences where such false promises have been made by individual to investors in mutual funds as well. Having said that, since we are a highly regulated industry in the country, so various measures for investor protection has been taken by the regulator. And in the past as well, SEBI has taken the steps in order to curb down any mis-selling in mutual funds. Starting from every person who's sourcing mutual fund having a unique identification number or EUIN as we commonly call it, or doing a categorization of funds so that AMCs can't have multiple funds in their bouquet of a similar similar type. Or be it telling people that what is the risk involved in the fund through a riskometer. So SEBI has been doing numerous things, and the latest now very recently the new proposal that has come for NFOs, wherein what SEBI is stating that they are proposing that mutual funds schemes must invest the funds raised during the NFO within 30 days of the scheme launch period. Previously, this period was said to be 60 days, which led to instances where funds remain uninvested, particularly in the thematic side. Despite attracting significant investor interest, SEBI has introduced this new rule along with a rule which is like lowering the distributor commission for switching of transaction from existing schemes to NFO. So obviously, let's understand how does this impact the retail investors. So by this, the regulator aims to ensure that the funds are being put to productive use prominently. This will limit the amount of money raised in NFOs to only what can realistically be invested in a specified time period, preventing fund managers for holding cash in the scheme. Because when the investor is actually giving the money to the scheme in during the NFOs, they are actually want to participate in the theme that is that is coming through that NFO. Also, at the same time, no. Cut- uh, protecting investors' interest through commissions, because no, this is another significant proposal addressed by the regulator, wherein commission earned by distributors when investors switch from one mutual fund schemes to another. In many cases, distributor used to encourage unnecessary churn in the portfolio of the client by making switches in schemes. To tackle this, SEBI has now mandated that when investors switch between a scheme A to a NFO or to some other schemes, the distributor will only receive the lower of the two commissions. So that is from an existing scheme. If I'm switching to a new scheme, so whatever the commission is lower between the two schemes, the distributor is entitled only for that. So, and now SEBI's new proposal is a very positive step towards ensuring that investments are handled more transparently and efficiently. The 30-day fund deployment rule will ensure that they know that the investors' money are put to work very quickly, and
Right.
the changes in commission for switches will also
So you
help
don't see
prevent
any
unnecessary churn.
so you don't see any problem in the implementation of this particular mandate?
So obviously, if you look at previously as well, the funds were getting deployed in 60 days. Now the time period has been reduced to 30 days. So when an NFO is launched in the market, the investment manager or the fund house already has have made a model portfolio. So they try to deploy the fund in that model portfolio. Because of certain reasons, the market may go up or down depending upon the purchasing price for the stock that they want. They might take a little more time, and that's why in certain times when the valuations are little stretched, you might take a little time to deploy the money, and that's what SEBI doesn't want. SEBI wants, if a client, investor has given money for a particular theme, so it has to be deployed in a shorter period of time rather than having cash in
Right.
the portfolio.
Right. So the question arises: are the AMCs capable of capable of doing this, because they will have to really, move in their timeline? What kind of a challenge will be there in front of them?
So very interesting, Kavita, this scenario now for the AMCs will be they have to be a little swift in terms of decision making. Rather than wait for for the market to come to their expectation, they'll have to be a little swift in terms of building the portfolio. And I'm very sure that all the AMCs that are currently functioning are very capable of doing that, because we have one of the we have the best fund managers, we have the best the investment teams working for the client interest. I think I don't see any challenge in a reduction of 30 days making to the portfolio. So I feel that we are very capable of doing it as an industry.
Beyond this, what are the so this was with regards to NFOs that SEBI has come up with. But apart from that, what are the other mis-selling issues that an investor or retail investor usually face? I mean, we know, because SEBI being there in the financial markets, we've not seen a lot of mis-selling, especially with products like mutual funds. But having said that, even from a distributor's perspective, what kind of complaints with regards to mis-selling usually comes?
So, being from the distributor fraternity myself, I can vouch and tell you, that SEBI is coming very, very strong on any kind of mis-selling or, wrong selling that they would have identified. Just to give you an example, there have been instances where senior citizens who are generally risk averse, are misled or pushed a very high risk, let's say a small cap or a mid cap fund. In certain cases, positioning of debt fund mutual funds as an alternate to bank FDs or not to senior citizens have also been done by certain individuals. So what SEBI is doing now is, through these EUIN, as I told you, which is a unique identification number, they are tracking the person who's actually sourced it, and they are asking for clarifications from distributors why this fund has been sold to an investor. So, as a distributor, I need to actually go and take a clarification from the client stating that he has understood the risk, and it's been completely told to him before giving him this kind of a product. So we are doing it as a industry. Secondly, there have been unnecessary churn that has happened in certain clients portfolio.
Right.
Let's say if I'm a distributor, I have sold.
So, you're right, you're explaining it very right, because the fraternity has taken stock of a lot of issues. But then, I was at an event recently, and while I was moderating, we were having a question answer session with the live audience. And over there, one of the gentlemen, raised this question that why distributors, are going for foreign trips, which are sponsored by AMCs. And if that is happening, how can they really trust that particular AMC and the kind of funds that are being pitched? That can be a forced pitch made to the investor, and then these investors are also forced in a way, because they don't understand the markets. They have no idea of as to how the fund operates. There's a lot of lack of knowledge there also, which he agreed to. He really had to depend on the distributor and just accept whatever he sells. But it's all happening in front of him. These people are being sponsored for trips and being gifted in kind, etc. So SEBI has taken stock of this situation also. But having said that, this was the complaint which we just came across.
So, very interesting thought, Kavita. But let me assure you this, that, gone are the days when AMCs used to sponsor trips for distributors. Because SEBI has actually come very heavily on the AMCs for doing any such kind of an activity. Having said that, now whatever money is being spent on any distributor or anything has to be accounted in the scheme. So AMC, the trustees are liable of that to check that all the monies that are being spent for various activities by the AMCs are actually coming from the fund. So the board of the AMC has to present it to the trustees in every board meeting. So it's very, very difficult, to do any kind or any kind of trips for distributors now. So SEBI has actually taken a stock and has come very, very heavily on the distribution fraternity as well as on the AMCs on this. So I can vouch and tell you that there are no more AMC sponsored trips that are happening in the industry now.
Piyush, I think my time is up for this particular segment, but thank you so much for participating and helping our viewers, and in fact making them aware of a lot of things, which is usually missed out by the investor and by our viewers also. Thank you so much for being there today. Thanks.
Thank you.
All right, time for a quick break, but then post that I'll be joined by Varun Fatehpuri, who will be answering your portfolio queries, and we'll be doing your life financial planning on the show after this break.